So I want to now go to another topic. I want to talk about new apartment construction. I had mentioned that we have sold 6 relatively new constructed buildings in the last 12 months, and I think that this is a place where there is, look, in Canada right now there is much more demand than there is supply of apartments. So there's a fixed pool of institutional quality apartments of maybe 700 to 1,000 buildings, and every time one of those buildings gets bought, it comes out of the pool, because that buyer is not going to sell it for a long time. So this pool is shrinking, and more buyers are coming to the marketplace. Okay, so 4, 5, 6, 7, 8 years ago, it was difficult to make new apartment construction work. I'm gonna say that today, you've got to sharpen your pencil for sure, but you can make new apartment construction work, and you can make it work for a couple of reasons. Number one, cap rates have just compressed a lot in the last 5 years. And the other thing is interest rates are at an all-time low, and I think interest rates are probably going to stay low for the foreseeable future. So new apartment construction now makes more sense than it's ever made before, and there are definitely buyers out there, and we think we've proven that there are buyers out there who are willing to pay more than $200,000 and $280,000 in one case per unit, and you should be able to make new apartment construction work at those levels. So we do, for our clients, feasibility studies, and we answer really 4 questions. They point us to a piece of dirt and say, okay, we'll answer these questions. Should you build? And sometimes that's easy. It's just, no, that's not the right place to build apartments. What should you build? And by what you should build, we mean, should you be building 1-bedrooms, 1s and dens, 2s, and what sizes, and what amenities should you put in? How much can you charge, right? And to make new apartment construction work, in Toronto, you need rents of $2.50 per square foot, those kind of numbers to make it work. How much can you charge? And then most importantly, what's the depth of the market? So if you build 200 of these things, is the market deep enough to absorb 200 units at $2.50 per square foot? So we think that new apartment construction is something that I think has legs, and going forward, you're going to see more developers stepping into that space, and you're going to see more buyers wanting to buy that product. So new apartment construction is a topic for a future webinar that we'll do with you guys sometime down the road. So when you think about new apartment construction, you get better returns over time. Okay, and let me just explain this. So let's say you bought a 50 or a 40-year-old apartment building, and typically when you buy one of these older buildings, 50% of your revenue goes to expenses and 50% goes to NOI. So now let's just do a projection of that 10 years down the road. Okay, so let's make a conservative assumption that your expenses go up 3% and your NOI goes up 2%. Remember, 50% goes to NOI, 50% goes to expenses. So you grow your expenses 3% for 10 years, and then you grow your NOI 2% for 10 years, right? So when you get to the end of 10 years, you're going to be underwater if you apply the same cap rate to it. Plus, you've got to include capital expenditure work that you've got to do over the 10 years because the building is already 40 years old. Now, compare and contrast that to a new apartment building. So if you build a new apartment building, your expense ratio is usually around 30%, and that's part of the denominator effect, right? So you have 30% expenses, and you have 70% NOI. Now let's grow that over a 10-year period. So let's say you grow your NOI by 2%. So your 70% is growing by 2%, and now you're growing your expenses, the 30%, by 3%. You go out 10 years, and you have probably no CapEx because it's a brand new building. Well, if you cap that at the same cap rate 10 years later, you're going to have your head above water. So I think if you look at new apartment construction over the long term, it does make sense. But if you're buying apartments for a 1-year return or a short-term hold, then it's difficult to do. Certainly there's some development risk in building apartments, but developers can figure out their land costs, they can figure out their construction costs pretty well. There's always that lease-up risk, and maybe the better term to use is lease-up variable, because risk means it may not happen. Look, the apartment's always going to get full. We just don't know how long it's going to take and what rent it's going to happen at. But as more and more apartments are built and successfully leased up, and sometimes leased up in record time, you're going to see more and more people, I think, coming to the sector because there just is no product to build. I think the other thing that apartment owners need to be looking at is that there's excess density on their apartment sites. And if you can get that excess density zone to build another building there, to ring your apartment building with townhouses, to some extent your land comes in free, You've already got a superintendent on the site. If you add any amenities, they can be shared between the old building and the new building, thereby raising the value of the older building. So we're big fans of intensifying an existing apartment site because the land is free, but because the other building also gets better. And we've seen a number of situations where owners have done that, and it's been very beneficial. In terms of, I just want to address sort of academically now what drives apartment demand and just show you some statistics. So apartment demand and rent growth are a function of, job growth, population growth, both internal and external, income, housing prices, vacancies, apartment construction, and diversified economy, and lastly political stability. But the big one really is job growth, population growth, income, right? So let's look at some examples. So let's look at Western Canada. So we want to look at where the population is growing. So Calgary's had a very strong population growth, right? 13% in the last census from 2001 to 2006. And look at Wood Buffalo. Wood Buffalo is the area around Fort McMurray. Had a big growth of 23%, with the tar sands and things like that. So generally speaking, strong population growth is equated fairly strongly or correlated to rent growth, right? And so now look at the average rents from CMHC in those areas, right? Wood Buffalo or Fort McMurray has by far the highest rents, and they also had by far the highest population growth. So population growth, good for rents. It's fairly obvious. Okay, this is something that we look at, for our clients, where we're looking at what we call the sort of the affordability gap, right? And again, we did this for Western Canada, and this is for 1 bedrooms. Then I'm going to contrast this for 2 bedrooms. So you take the median income from from Stats Canada, and we take 30% of it. So there's the estimated, in the third column, the estimated affordable rent, and then here's the average 1-bedroom rent in that city. You can see the number is minus 46. So it just says that the average person paying the 30% of their income paying the average rent is minus $46. Okay? Now, look what happens when you do the same. You notice they're all negative numbers here in the gap, right? Now look what happens when you do this for 2-bedroom apartments. So now we assume that you take the average income for 2 working people, right? You take 30% of that and say, what's the rent that they can afford to pay, and then what's the average rent, right? So wherever the gap is big, that's some place that, quite frankly, people can afford to pay more. So the moral of the story, the lesson that I've learned from this is, if you buy an apartment building that's all 1-bedroom apartments and you renovate it, the average guy paying the average rent doesn't have that much more money in his pocket to pay for it. So maybe you shouldn't be renovating the 1-bedroom. But if you're renovating your 2-bedroom apartments, then the average couple paying 30% of their combined income have a lot more money to spend. And so just by studying population growth and these relatively easy statistics to find on the internet, you can make some good assumptions about where you should be buying apartments and things like that. Now, when you look at larger cities, it's not really correct to look at the global number. You have to break this down by census metropolitan areas, right? So in Toronto, we've got 300,000 apartments. It doesn't make sense to look at one number, but look at the different areas and run these stats on it, and look at the gap between what people can pay and what the rents are, and see where that gap is big, and then go and buy apartments in those areas and renovate those apartment buildings. So in terms of acquisition strategies, I've said this a couple of times, you can only buy apartments where the apartment universe provides apartments to buy for, right? So Calgary, with a population of over 1 million, only has 36,000 apartments. Hamilton, Ontario, with a population of almost 700,000, has 42,000 apartments. So I'm going to argue that if you want to buy apartments, it's going to be much easier to buy apartments in Hamilton than it is in Calgary. There are more apartments in Hamilton. There are probably less investors looking at Hamilton, and you can probably get better pricing in Hamilton and things like that. But I think most people, if you're seeing this data for the first time, are probably surprised to know that Hamilton has more apartments than Calgary, right? So I guess the point I'm making here is you can only buy apartments where there are apartments, okay? I'll tell you right now that one of the best places to buy apartments is Markham, Ontario. For those of you that know the GTA submarket, it's an affluent suburb of Toronto. There's been strong population growth, there's strong employment growth, but there just aren't any apartments to buy. There are only 1,500 apartments in the town of Markham, and Markham has a population of about, I think, 180,000 people. So Toronto has 10 apartments per 100 people. Markham has 0.69 apartments per 100 people. So you can make some decisions from there, right? So if you bought an apartment building in Markham, income's high, population's growing, and we're all 2 bedrooms, that's a building I'd want to buy and I'd want to renovate because I know that there's no competition and that the people have the money to buy it, right? So looking at the statistics, the apartment universe, the population, the average rent, the gap between what people are paying, what they can afford to pay, can give you some pretty good indicators as to where you should be buying apartments. So now let's look at population growth here. If we look at just some select cities across Canada, you see Calgary's at 13% growth. St. John, New Brunswick had a minus 0.02% growth. All things being equal, you would want to buy apartments in Calgary because the population is growing, and maybe you wouldn't want to buy them in St. John because the population is pretty much staying the same. I mean, all things being equal, right? So acquisition strategy number 3, you should consider building apartments where the apartment universe is low, but the income is high. And the example I just gave you a moment ago of Markham, Ontario, would be, a good example of that. Last topic I want to discuss before we break up today is this topic of student housing. We've got a large student housing building for sale right now. It's on our webpage. It's about 795 beds, and that's the nomenclature used in this building. You don't refer to them as units, you refer to them as beds because they're usually 4- and 5-bedroom apartments. But student housing is a sector that we've worked in for probably about 8 years and understand it well. And it's a fascinating business. I refer to most kids today as 6-pocket children. They have one set of parents and 2 sets of grandparents. And there's a lot of money around to give little Johnny a good education. We realize the value of education, and parents are willing to pay for the children to live in good quality accommodation. So typically, what makes student housing work? You build a 4-bedroom, 2-bath apartment. And if you build that and you rent it in the marketplace, let's say in London, Ontario, you may be able to get $1,200 or $1,300 for that apartment if it were just rented to a family or to the regular renter. But if you rent that unit by the bed, so you rent it 4 separate times to 4 separate families, you may be able to get $500 per bedroom, and you are able to squeeze $2,000 from that same amount of real estate by renting it to students by the bed than you could from the marketplace at $1,200 or $1,300. So that's really the rub or the juice in student housing. Now, that comes with some downsides too. I mean, student housing is a little more intensive on the management for sure. Student housing has much higher turnover. So if normal turnover is 30%, student housing turnover is 60 or 70%. So therefore, your maintenance and repair and things like that are much higher. And then there's certainly a management component to it. But there's a niche market that's available to investors to get into. Certainly, construction works in student housing because you're getting so much more money per square foot because you got more people living in it. The interesting thing about student housing is that parents have money and these kids are rich, right? They're drinking Heineken, okay? This is a niche, I think, that can be explored in major Canadian cities for both colleges and universities, and you can get much more rent from the same amount of square footage, right? So it's a niche market, highly profitable, and there probably is a first move advantage for a couple of people across the country to step into this asset class, and probably at some time there's an opportunity to roll this up into a public REIT. In America, there are 2 real estate investment trusts that only focus in on student housing. So this is a topic for a future seminar. Just to show you what student housing looks like, this is new student housing in Waterloo. We've got this for sale right now for about $49 million. It's 795 beds in 8 different buildings. Essentially, they're all on the same street, right across the street from the university, and they're all 4- and 5-bedroom apartments. If you're interested in this, go to our webpage, and then you can download the details on the property. So to receive our listings and to just get more information from us and join us on future webinars, here's my email, and just a quick word about Rock Apartment Advisors. We're consultants, and we are brokers. We've done about $400 and some odd million of transactions in the last 10 months, and a lot of that has been new apartment construction. We try and cooperate with brokers on most of our deals. So if any of you are interested in talking to us and building a relationship, please shoot me an email. I'll be happy to chat with you. Okay.